Welcome to my morning report chart analysis videos on Wednesday the 20th of June with me, Richard Perry, market analyst at Hantec Markets. We've got a decent rebound in risk sentiment. We had Wall Street closing well off the lows of the day. S&P 500 bounced nicely, following on from quite significant early losses, and that has helped general market sentiment today. All the equity markets in Europe are higher, FTSE 100 outperforming there. But generally what we're seeing is the dollar strength continuing. That dollar strength that had a test of 95.15 yesterday as the October-November highs, the resistance of that October-November highs came in. It's sort of still putting pressure on that 95.15 level today. What we've seen is yields in the States rebound well off the lows of 285 yesterday, above 290 again on the 10-year yield, and that's fairly much sort of indicative of what we're seeing in this dollar rebound. Now, as the yield spread continues to tighten, and that reflects the yield curve in the States flattening, it's questionable as to whether the sort of longer term or the longer term implications of that can be seen, whether that US dollar strength can continue in that environment. But certainly for now, we remain pretty positive in terms of the dollar. As also yield differentials are helping that dollar. But generally speaking, this market has recovered some of its risk appetite. The yen has weakened on dollar yen weakened to 109.50 area yesterday, rebounded quite strongly since then. But interesting that the euro dollar is again lower. 15 big figure is the key level to watch there. I'll talk about that in my analysis videos. Sterling dollar is under 32 big figure. There's a key vote in Parliament today for Theresa May and the Brexit deal, so that could remain under pressure with that. But generally speaking, we're seeing dollar strength still in place. What about general markets today? We'll be looking at Sintra. We've got a whole range of key central bankers actually speaking at Sintra today. We've got Kuruda of the Bank of Japan, we've got Draghi of the ECB, and we've got Jerome Powell of the Federal Reserve, all the three major G3 bankers speaking there today, so that could well have an impact on the forex markets. Data-wise, we're not all that important on the data front. Existing home sales at 130, and then the EIA inventories is all really we've got to go on. Now the oil price rebounded yesterday on the API inventory drawdown. We're expecting another drawdown from the EIA today on the crude stocks, but oil price I think will be sort of looking more towards the OPEC meeting at the end of the week to really have decisive direction. But my chart today is again sort of around this risk appetite angle, as the Aussie yen has rebounded from the range lows once more. 80.50 is that range low that's been in place, this range, for several months now, and 400 pip range, which is pretty well defined, isn't it? Bouncing from just above 80.50 yesterday, and back above 81 figure, so that's a positive certainly. And you can look at these momentum indicators, they are ranging still. RSI again sort of finding support in the mid 30s. Stochastics are just beginning to lose a little bit of their way, but stochastics and MACD lines are still falling, so there is still that uncertainty as to whether this range will be tested to the downside. Today's session I think is key because we've had an initial rebound that's just tailed off a touch. 81.66 was that rally high, but it's just come off the top a touch as the RSI has unwound to 60. MACD lines back to neutral. Stochastics is beginning to lose their way on the hourly. So that is today's session is a key level. If it again closes lower, having sort of attempted to rebound, would that suggest that the momentum in this sort of rebound is being lost? 80.50 is a key level, and a breakdown or a closing breakdown would actually imply another 400 pips of downside. So what we need to see is this is the market sort of closing higher and then pushing through sort of 82 82 area, which is a bit of a near-term pivot. You need to see the market above 82 figure, and then it can start to sort of think about recovering back towards 82.60, which is the mid-range pivot, which has been in place for throughout the sort of 3-4 month range. But yeah, an interesting turnaround. But can it be sustained? And obviously, your Aussie yen trade is a very much of a risk on, risk off trade. And obviously, with the rebound today, a little bit risk on. But again, if the market sort of takes focus on the trade tariffs once more, we could well see yen strengthening and pulling Aussie yen lower once more. So with that in mind, I wish you good luck in your trading today, and it's worth watching the Aussie yen. So I will speak to you later. Thank you.